Good morning. How's everyone this morning? It's Friday. Good morning. One second, everybody. Hold on. Friday. Okay. All righty. Well, what's going on here? We've established a trading range with yesterday's reversal. Yesterday's gap down, as we discussed yesterday pre-market, it opened up the door to a move lower, but it held, and we got that nice reversal day. And in retrospect, 2020 is always fantastic, where I had gotten long these spiders pretty close near the low of the day. And let's just say I left some money on the table. I didn't expect such a powerful rally that it would get that far, but it did. And that's a wide range, powerful bar coming right off of support. And the MO of this market has been buy the dip, regardless of how ugly that dip looks in the moment. The market's going to go up no matter what. And that happened again. So at this point, we've got a wide range bar breaking out at the high, an attempt to drive it lower, which held support, and now a wide range bar back to the upside, which now provides us two very distinct lines in the sand, which are pretty close to each other. Now, the trend being up, one of the things that I said a few days ago was, this breakout failure is ugly and the wide range bar is ugly, but the trend is up. So we give that the benefit of the doubt, because in a bullish trend or bullish market or stock, whatever it is, bearish events have a tendency to be ignored. And that is our confirmation when we see that happen. It isn't, so to some extent, that is our assumption because of the bull trend that it'd be ignored. But we can't ignore reversals like this, because that's how corrections, short-term corrections start, which push prices down to some lower level where buyers feel comfortable stepping up again. And the surprising part of it is that even after, pretty big bearish bars like that, buyers are willing to step up almost with no correction, or really that's no correction. I don't know percentage-wise what that is on the move down, but it's negligible versus this is what we would consider a normal type of correction. It's a bit deep, but when it attempted to hold at the minor support level, that failed, and it went down to the major support level. And that is a typical price action occurrence. Fail at minor support, go to major support. And then buyers step up to see if that'll hold. We look at the price patterns at the time, and we look for red bars ignored, gap downs that are bought, and so on, bottoming tail bars. That's the bar by bar analysis that we do at the appropriate location. This one is unusual. And let's just say this one is normal. Normal because of how it pulled back, the rounding bottom, the candles that form, where this one is like falling off a 10-story building in a sense. And okay, my legs are broken, but I'm going to get up and run again, and run very well. And that's what's happened here. So the question now is, can we get above this area and go up to the next area? The routine. When we see a wide range bar, the analysis is such that if it stays in the upper half, that's bullish. If it stays in the upper quarter, that's even more bullish. And if it takes out the high and runs, well, that's a super bull price action. So today, you can see on the big report again, widely anticipated jobs report, markets were up, they came back down. So intraday pre-market here, we have a little bit of a breakout failure, a bearish 180, but it's holding support at this time, and it's obviously in the upper part of this wide range bar. So even though this short-term event says bears took control, bulls are solidly in control unless this level is broken on the daily time frame. And then, of course, we'll just assess the depth of retracement or lack thereof and how this plays out. That's how we do it every day. Qs, same story, pretty much the same type of price action. Pre-market breakout, 180 right back down, so far holding. This price action in this time frame suggests a pullback. And the other concept is, which we saw happen multiple times in the past in this market, because it's erratic, or what I call Mr. Schizo, is wide range bars create momentum moves, and they're supposed to create support where there is none. Right? That's a void. There's no support here. So it's supposed to create support by chopping around, retesting, and then move up. So this is how we do the analysis to see how things are progressing in the moment versus the past and what the trend is. We've got a wider trading range here on the Qs and our lines in the sand, and anything that happens today within that is pretty benign, unless it goes all the way back down to the low of the wide range bar from yesterday or breaks out above the range. Russell, a wider, sloppy type of range. It's been consolidating for a while, and we'll see where it goes. It's held its support. It broke that level. The next level was close by. It held, wide range bar up. See where it goes. So far, just running in place. Transports, sloppy grind to the upside, up at resistance and holding. And oil is down a little bit here. We'll take a look at that. And where was the trouble in this market was, and where is my, there we go, right, the leadership. The leadership cracked. That's where the trouble began in internet and technology. And this was a very bearish move to the downside that violated major support on this time frame after a breakout failure. And unless this can retrace in the next few days deep into this area, a break like this suggests a move lower. So this is an ETF that we have to keep an eye on, and these stocks to see, does this strength continue? Now that 50 MA, where these bars are overlapping, are going to be the reference point if it can move up. Right now it's holding here quite well, and it's got a void above because of the sharp wide range bars move down. So we'll see how far that gets. And technology, not hit quite as hard, but did break some support. Had a great day yesterday, and pretty much what we're seeing everywhere. What happens from this wide range bar? Consolidation day, continuation, so on and so forth. We'll assess it as it unfolds. Futures, see the same action as the spiders. The breakout that failed, it's holding support, bottoming tail bar, and it's a 24-hour chart. So you've got a different look to the bars because of that, but it held on that support level, reversed back up, suggesting it's going to go higher. Qs reversal, you had the break, and we'll just have to turn that red, but you can see the breakout bar failure here and the move down to support, which held. So we've got a new trading range that's going on here. Line in the sand here, line in the sand up there. Dow here is down a little bit. It's gotten sloppy, but it was leading on the way up here. And so the concept that we call bringing up the rear, where the underperformer begins to outperform. And you see that the Dow has that little resistance area. But so far, that's it's, while sloppy, it's a bullish consolidation within a move up. Right? Well, what could be called as a bull type of flag. It's a little whippy. If it's tight, that is the ideal, but this suggests that after that bottoming tail that it could push up through here. So we'll see what happens there. And just as a little side note, that's what we were looking at back there in March as the bottom form that I pointed out, the breakdown bar failure as the start of this bottoming price action, retesting that bottoming tail over there. No, same price action on the news, and we'll see how that unfolds. Bonds here, slopping around, breakdown bar failure, possibly if it turns around here, which this starts moving up, interest rates start moving down. And now that I'm looking at this, it brings the thought of financials, since we know that that's inverse. Whereas they're up at resistance. We talked about this in the ETF letter and the advisory letter. So if those interest rates are going to move down, which is only short term, but because this is up at resistance, maybe, I think Dan usually says there's no juice here. I don't remember exactly, but this is based on that intermarket analysis, and this resistance is a potential for a bear call spread, and possibly in those financial stocks, which we'll take a look at after the market's open, or when Dan's talking, I'll take a look at them. I know some of them are up at resistance just like this. Some showed relative strength. We'll take a look at that. And oil, reversal yesterday, going nowhere today. So nothing much to do there. And gold, just slop, continues to be weak. And I forget what that service was that recommended gold that Dan got their stuff just to show how bad the recommendations are out there in this industry, recommending buying gold at some point. And it just used to go down.
Called Options Profits, and I haven't gotten his newsletter in a week or so. Maybe
he probably cut you off, Dan.
That's exactly what I was going to say. Maybe he heard about me and said, "This guy's out of here."
Yeah, I think they call it option profits, or the lack thereof.
Exactly, but even John Malden, the macro guy, was at the highs. I remember doing a chart lesson, actually, that I put in the Mastering Advanced Credit Spreads course. He was pounding the table for gold at the weekly breakdown. Made no sense.
Yeah, I guess he doesn't look at charts either.
Yeah.
Anyway. All right. Jerry mentioned TTWO. And okay, some rally going on there. That's a rough one. Well, wow. Way back up there. What a reversal. That is like a gift from the heavens if you were long this and got caught on the way down. If whoever got long that yesterday, hats off to him. Nothing I would ever buy, but wow. Move right back up to the high there. You don't see that happen too often after a crack like that. All yours, Dan.
All right, thanks. Good morning, everyone. Zero problems with our opens. And as we said, and Greg and I still have to chat a little bit more, but I'm only going to track the ones in here that I give you, that I haven't read on my sheet, unless you ask me about them, of course. But there's nothing to talk about right now. Everything's fine. So let's go right to the gappers. This one. Now I'm going to show you a few of these as a lesson, that even though, and when I go through my pruning, if you will, in the first 30 minutes of potential gap trades, I'm going to show you where I've deleted a bunch of them. But the lesson is, maybe don't delete them so quickly. Maybe come back and look at them later, maybe set an alarm, etc. So look at this gap yesterday on earnings. I would have said it's gapping into a friggin' brick wall. So I had no interest. But look at this 15-minute. Solid strength, no tail, bullish consolidation all day, closed with a little afternoon breakout. This real body is a breakout. Weekly, look at this monthly trend. So, oh man, now it's up another friggin' $12. So nothing to do with it, but I'm going to show you a few of these that, what I just said, they weren't tier 1 gaps, but they turned into one later on in the day. What do we got with this? Uh-oh, I don't like the name Med in it. 386. Here's another one. You know, it's extended now on the 15. That's not a tier 1 to me. Diabetes, so another healthcare, but you know, I look at these trends daily, weekly, monthly, and I say, wow. And look what jumps out at my eye. This started, well, you got a vanilla breakout right there. You know, nice consolidation. Then multi-week consolidation, bottoming tail, pro gap. Look at that. May 14, pro gap. It has not traded, well, right here it did. It traded under that pivot low. But that was quite a run. And now it's gapping down though. You know, nothing to do. A Dish, 31.46. So this could be a 30-minute high trade. Gap into resistance, still in a downtrend, daily, weekly, monthly. But this, you know, this would be our weekly retest. So that's worth watching. I'm going to put that in a window. Amazon. The reason I have this here is because it was a tasty trade recommendation today. Well, let me ask you all. Do you think they put on a bearish or bullish trade? They're recommending a bearish directional, a bear put debit spread. Does this chart support a bearish setup? Yes or no? Daily, weekly, monthly. Nope. Absolutely not. The old Shake Shack. Remember this gap we were looking at that day? But I remember it. It was like a 10% gap. Look, it went from like, you know, 46 to 55. So I remember we did not trade it, but we were watching it. I think we did trade it here though. We did something on this breakout. I think I forget. But now 60.50, it's a bearish gap. So that one's maybe 30-minute low. 30-minute low I like. Let me put him in a window. The old Shake Shack. Remember said G we've been watching for a long time? 51. All right, there's too much support here to the left. If this was not a square box of support, then this would be a nice bearish gap under this, you know, entire month of consolidation. KHC, it got sloppy. I actually posted this in, I just grabbed a weekly chart, threw it into Facebook this morning when it was at 63 bucks. Because look, 63 was way the heck up here. And then it would make this week's low a higher low. And that's messy. I mean, that's not a V top, but it has room to go. So I'll keep an eye on that. Hey, Felipe. Well, I don't know what's going on there, but it had said it was on my earnings list. SIBO, the exchange, 97.25. It's in a downtrend, daily, weekly. 97.25. Nah, doesn't interest me at all. But we'll come back and look at them. Whiskey Uniform, Western Union. 20 bucks. Nah, it's right in the middle. No interest. T2, Jerry was asking. 128.50. You know, I do the same thing every time. I mark it off. So it's gapping right up to resistance. But to me, Now it's a big gap. So, and it's holding very well pre-market. So we just watch it. I don't know how it's going to set up. Ed, I think it's either energy or utility. Yeah, yeah, Felipe, sure. Let me come back to that after the gappers. Echo Delta, I can't tell where he's opening, so I don't know. We'll come back to him. CBS, this is a company with the CEO in trouble for his violating company policy with a woman. This is yesterday's gapper, courtesy of Sanjay. Let's keep an eye on that. I like it daily, weekly, monthly. So a few more from yesterday I wanted to highlight. NTR, I'm keeping this on my list. It looks great. Nice gap, volume, wide range, closed at the high. I just need a pullback here. I'm going to put this in a different window. Okay, here's another one from yesterday. Well, this was what I call the bear gap that bullies. Look, in the first 30 minutes, it fills the gap. Now, this wouldn't have been a quality one because filling the gap was right to resistance, but it kept going. It kept going and closed at the high. Weekly, monthly are in a trading range, but if this can set up a 1, 2, 3, if this is a 1, 2, 3 for Monday, I'm hoping today just gives us a ton of 1, 2, 3 trades. And what would that mean? It means today's a little consolidation day at the upper, 80% or so of this bar. Let it take a whole day to burn, to rest from this sprint. DXCM, pro gap, it's kind of excessive. I mean, look at that. It went from 95 to 1.25. But we'll keep an eye on him. It might take a few days. Now, this was yesterday, bear gap. And I think I even said 5-minute low, was aggressive short on that. But it's still bearish, so I'm going to keep it on my short watch. So then when we go to our warm-up bench of weakness, I'm going to look at that one. All right, here's another example where I was saying I had no interest in this. I deleted it from my minder yesterday because there was no price void. But look at this first 15-minute bar. Here, let's mark that off. A 54.50. So the first 5-minute bar was right here. See that? So it was right at this resistance. So, I probably still would have had no interest in it. But what about on this afternoon breakout right here? At 1:30? At 1:30, then it was 56 and change. See, so the bar sliced through resistance and then had a bullish 15-minute setup. So that's what I'm saying. That's another example of where I deleted it, but I shouldn't. I'm critiquing myself. That I'm that's all. I think I just need to leave them in here when I do my 30-minute perusing, and then come back and look at them again over the doldrums. Allstate, that was yesterday also. It was sloppy, so I moved on, but I like the monthly. I don't know, we can find better. So I'm getting rid of him now. This was a bullish gap surprise on Wednesday that we were watching, and it kind of got sloppy. But look, now it's an engulfing bar, and I still have a price void. So I'm going to keep this one on my list. All right, and that's it. So Q's. Now let me. Here, I'll look at the trades that I have in red, meaning I've told you I was going to track them in here. All right, Facebook Grub. Facebook, we were trying to sell a put spread yesterday at 50 cents. Grub is fine. Then we have a put spread in that. GWW, we have a put spread, retraced a little bit. Nothing to do though in terms of management. ITA, we have a put spread, that's fine. Team, we have a put spread, that's fine. Though I did not give yesterday, and I meant to, but I'll do that, you know, within the morning here. All right, those are all the ones I have in red, which I've officially given the room. Are there any others that you would like me to comment on? Now, okay, 9:29, this bell is going to scare me. Boom. I was prepared for it today. All right, flipping. When we do a bull call debit spread, okay, that's a directional. We're buying an in the money call and we're selling an out of the money call to make it a positive time decay. So we have a little bit of a cushion and we're willing to cap our gain as opposed to just buying a call option, period, because we're fully bullish. Can we let it expire and earning the money if everything's fine? Of course you can. You've made your max gain. Of course you can. Or if you wanted to do in what I call an offensive adjustment, you can do that too. How would you do that? Well, Greg's favorite word, you want more deltas. How do you get more deltas? You increase the long exposure or decrease the short. So how do you decrease the short? You can buy to close it. If it turns into a directional, you can roll it up and out, your short call. Okay, so does that answer it? All right, Jerry, here's T2. Absolutely nothing to do. It's a big old gap. Just put it in a 5-minute window and just wait and watch. You know, how quick you get on board is always a function of, you know, how aggressive you want to be, where your stop is. I'm looking at our opens here. All right, so GWW is fine. Some more that we were watching from yesterday. You know, Citrix, I have an alarm. I think my alarm's right here at 1:10:20. Look, it's getting close. So let's watch that. Yeah, sure, Ann. Very simple. You log it in as one order, and you're buying to close one position, and then you're shorting to open another. And so you just pick what the other is. For example, do you want to go out 1 week, like to next Friday? You can do it at the same strike, higher strike. So that's all. You're just rolling. Just means you're you're changing one position for another. All right, this though. All right, let me get our though. Yeah, you're welcome, Jerry. So Jerry, you tell me when you think it's ready, because I can't watch everything. And then we'll look. But markets, 5-minute highs here. Markets are doing fine right now. So the 90.85 still, it's pretty darn spready, but yep, yesterday the midpoint was 82, now it's 62. Yep. Should have done it yesterday, but I just totally forgot. OTEX. Yep, I like it. Nice breakout on the weekly a couple weeks ago. So just watch your 5-minute chart for an entry. Looks good. Open text. I remember him. Here, we'll put him here. That's GPN. Hey, I actually like it better that it didn't gap up to 131. So now 30-minute high on GPN is an idea. Here goes the dish. So see, it's 9:34. So this is only, 5-minute buy in process. But is this our retest W bottom with a bullish gap taken out a prior pivot on the daily? So how aggressive do we want in? Now, Mark, now the cues are coming in. So let's watch it for 10 minutes. I mean, this could be a great trade, 10-minute high. OTEX, just, yeah, keep an eye on it. T2, see, coming in. I mean, I like them when they come in. Shallow retracement, a buy setup or a double, a retest is higher odds, of course. Looking at our opens. And some other ones I was watching. And your pace C, it looks extended now. On Daku, I was watching for the last couple days, remember? Look at Daku yesterday, finally broke out. Shoot, remember? I've been watching this for 3 days. Little bottoming tail here, false breakout. Let's see what we can get for the $50 puts. Keep an eye on Dish. Dish is still going. Let's get a trade in that. That's too spready. Daku is too spready. Unless you did a directional. All right, this looks great. I mean, let's go. I got no problem selling the $29 puts. A couple weeks out, it's holding. It's 15 by 30, so there's not much juice in the juice department. So now the question is, does this warrant a directional? I don't know, not to me. There's too much resistance here. Today's Friday, so let's kind of keep in mind about selling some puts that expire today.